Hey guys, welcome back to another video, and today I'm here to talk about two stocks that I think could truly change your life. I'm not here to talk about BS. I'm here to show you guys what I really think, my opinions are, and where I think these companies are going. And I truly do think that if you invest into these two companies right now, today, that they'll change your life. The returns that these companies have, the business models they have, and their management team, all in all combined with the company's price movement, I think has the potential to change your life if you invest enough money into these stocks. So without further ado, if you do enjoy this video, be sure to smash that like button. It does me a world of favor if you guys smash that like button. Also subscribe to the channel. I'd really appreciate it. We're almost at 400 subscribers. We're 10 away. I'm hoping that tomorrow when I make another video, I can say thank you for 400. So let's get right into it. The first stock we have today, one that I cover a lot on this channel, but one that I really need to reiterate how good this company is SoFi Technologies, ticker symbol SOFI. SoFi Technologies has been on an absolute tear, to say the least, this past year. And then we look at the past 5 years, this company hasn't even been public for 5 years. So the fact that they're doing what they're doing in this short amount of time, we see that their market cap is almost $30 billion. Anthony Noto, great CEO, doing great things with the company. PE ratio is high. That's because the company is good. And then we go down here, look at their earnings. They're beating. They met in line, but then they're beating, and absolutely crushing earnings. And this is all on an upward trajectory with higher and higher predictions with each quarter, higher and higher outlooks for this company. We see they're in a multitude of sectors. They're in banking, and they're also in software. Two great parts to combine and be in. And SoFi, the thing that I reiterate so often with SoFi, if you haven't seen my other videos, go check those out. But with SoFi, the thing that is the biggest thing with SoFi is they have 5,000 employees and no physical locations. And this is a $30 billion market cap trading at a 50 PE ratio. Okay, let's keep that in mind. Now let's look at Wells Fargo, one of the biggest banks in the world. They're a huge company. They're $253 billion market cap. They have 217,000 employees. They have a lot of locations. They're paying a lot of leases. That's a lot of overhead. They're also paying a lot of employees, which is a lot of overhead. And SoFi has none of this. And they also have they have the banking, and then they have the software aspect. Wells Fargo doesn't have that. That's why their PE ratio is so low. So Wells Fargo has all this overhead that they're paying. They don't have the software aspect. They can't get rid of these locations because Wells Fargo's customer base, who is people that are used to cashing their checks in person in the bank, they're not gonna up and leave and say, oh, Wells Fargo, we're shutting down. We're Wells Fargo. We're shutting down every location in America because we don't want to pay the leases. We don't want to pay the employees. All of their customers are going to be up in arms. It's not going to happen, at least not right now. And that's what we're investing for. We're getting ready right now for the future. So if we look at also Chase Bank, JP Morgan and Chase, we see that their market cap is 800 billion. That's insane. So, this is a huge company with a PE ratio of only 15. That's because look at their overhead. They have 300,000 plus employees. They're paying these leases. They pay a dividend yield. There's so much that this company is paying out. They're a great company. They're worth 800 billion, but they're not SoFi. SoFi is in the early stages of growth. This company, the numbers look great. If we go to the quarter 2 investor presentation, which I've shown so much of, SoFi really just doesn't get better than a company like this. Their stock price is running, but I think it's nowhere near done. We look at the past 3 months, and we see the stock's up 100%. Almost in the past 3 months. That doesn't really happen in the stock market. This is a special stock, to say the least. But we look at their members, their compounding annual growth rate is 51% in growing members for this platform. It's insane, honestly. Their products in the thousands are compounding at 53% as well. We go down here, we see their long-term approach, their margins. It went from 9% in 2022 to 29% in quarter 2 2025. You're growing margins, you're becoming more profitable, and so revenue's rising and the margins are increasing. This company is getting more profit. This company is becoming worth more. So we also go down and we see the revenue increasing like this. We see that it's increasing in different sectors as well. That's another great thing to see. So we also look at their loan types, what SoFi is giving with their lending or originations. They have personal loans, which are growing immensely. This is, only the first 2 quarters. They're already way more than halfway to all of 2024. They're more on second quarter originations, and there are, LPV originations. They're more on that too. Student loans, they're way more already. Home loans, they're way more than that already as well. I mean, they're literally double what they were at last year. So I really love to see that. I mean, SoFi, just the things that they're doing with this company, the way that they're growing. I really believe in the management too. Looking at Anthony Noto, I mean, you see what he's doing with this company. But I mean, just everything they have in their financials looks amazing. And that's the thing. A lot of the times, these young companies in these early growth stages, they don't have great financials. You're taking a risk, when you invest in a company that's in debt. They're in debt. They're not, net positive with their profits. They're still trying to, like, they have the concept of the business that's great, but they're not actually making money. You can't invest in those companies and be, sure about it. But this one, you can be pretty damn sure about it. So I really do think SoFi is an amazing growth opportunity, coming on these next 3 to 7 years. The numbers look great. I mean, the numbers look great. The business model is amazing. There's just a lot of room for growth in SoFi. If we go over a little bit more of these numbers, I actually wanted to see the company metrics is a very, very interesting one. I mean, just look at where they were in 2023, and then we see quarter one 2023, compare that to now, they're over double what they had. So year over year, we even see that their members have grown 33, almost 40, or almost 34%. Their products are growing the same. New products, their lending products are growing, 27% year over year, 7% quarter over quarter. That's insane. Their financial service products are also growing 35%. So the growth rates on this company are insane. If SoFi keeps up these growth rates, which I think they will, or even grow higher because they are in the early stages of growth, they're, attracting the young crowd, which doesn't have much money right now. People between the ages of maybe, let's say, 18, just opening their first bank account, all the way up to, I'd say, around 35, 30. That's who SoFi is targeting. That's who SoFi is targeting because as their life goes on, their net worth is going to increase. That's what happens. With time, people's net worths increase, and SoFi is going to be having, or they're going to have more assets under management, and their financials are going to look a whole lot better than they do right now, which is hard to believe because they're already so great in the early stages of this company. So the way they're setting up, I mean, I don't see a better company in the stock market right now, honestly. I think this is a life-changing play to get into SoFi right now. I really don't see anything better in the stock market, so I really do like SoFi right here. I think that this is a no-brainer investment, to say the least. SoFi, very good right now. I'd definitely get in on that. And then the second stock we have today that I think can also change your life is ticker symbol GOOG, Google. Google, Alphabet Class C. You can invest in the other Google too. They're both the same. I get a lot of questions about that. It doesn't matter. But I have this one. I need to put more money in it, to be quite frank. I mean, we're up 8%. I haven't been in this stock that long. I haven't, because I only recently started looking deeper into it. This is a $2.5 trillion market cap company. Very big company. One of the biggest in the world. And why is their PE ratio 22? Why? We look at competitors of Google. Let's take a look at Apple. So Apple, let's look at their PE ratio. Apple has a PE ratio of around 35. Amazon, another very comparable stock to Google. Let's see what their PE ratio is. 35. I'm seeing a trend here. And then we go to Microsoft, another very comparable company to Google. Their PE ratio is 37. So you look at these PE ratios, and let's factor that into Google, which is, honestly, a very, underbought company. They're undervalued. Google is an undervalued stock with a PE ratio of 22. I think that they're worth a lot more than that. They definitely have the size with a $2.5 trillion market cap, but I think their PE ratio is very low for what this company really is. And the reason I'm investing into Google, yes, it's because of Google. I do believe in Google as a whole, but acquisitions. What did Google acquire? Waymo. Google acquired Waymo, the anonymous driving cars. You've probably seen them if you live in, a major city in California, such as San Francisco, Los Angeles. There's a few in Texas. I think they're in Phoenix as well, or that's going to be rolled out. But look at the growth that Google has on Waymo. So Uber does more than 200 million rides each week, a whole lot of rides. So let that sink in. So if autonomous rides can capture even half the market, that would mean 100 million rides per week. That's about 1,000 times where Waymo is today. And Waymo is already making a lot of money for Google. So we see 200 million rides a week translates to about $1 billion a month and over $10 billion a year. At $30 per ride, we're talking about revenues close to $300 billion per year. Imagine you add $300 billion to Google's revenue. I mean, probably wouldn't hurt, right? I mean, let's look at Google's revenue this last quarter. Let's see Google's revenue in 2024. So Google's revenue 2024. That's their revenue in 2024. It was what was it? In their most recently reported fiscal year, Google's revenue amounted to $348 billion. If Google captures only 50% of autonomous rides, their revenue is 300 billion, and with the margins on autonomous driving, you don't have to pay a driver. The margins are insane. I mean, just let that sink in for a second. So that's a lot of money to add on to Google. That would double their worth right now. They'd be a $400 stock. Whatever money you'd put into Google would increase by 100%. So we see that investors will soon recognize that $300 billion revenue figure for the current ride-hailing market has substantial growth potential, and it could easily expand by 2 to 3x. A $1 trillion market for autonomous rides isn't out of the question. Also very true. This is not out of the question at all. So Google looks very good right now, and I think that the Waymo, I mean, I don't even have to say too much, honestly. I mean, it's just the fact that Waymo just isn't that known as being connected with Google. I think once people really do realize, oh, wait, Google owns Waymo, they're getting all of Waymo's profit, all of Waymo's revenue. Everything Waymo is creating is getting given to Google, and they are making that money on the top line. Once people realize that Google is more than just Google, and they're also the leading, autonomous driving vehicle owners, I think the stock has a lot of room to run. So I don't even have to say a lot about this. I think you guys can look into this yourself. I mean, this is, they're saying with the 50% margin, that I think that's generous. I think they'll get more than that. And at a 30 times earnings multiple, that would imply an additional valuation of 4.5 trillion for Google. 4.5 trillion added onto 2.5. You're 3x in the stock. You're 3x in the stock price, and that's just from autonomous driving. That's not Google Cloud. That's not their search engine. That's not their ad revenue. This is just autonomous driving. So let that sink in for a second. You guys can think about that a little bit more. I'll make a full video on Google pretty soon here. But that's all I have for today, guys. If you did enjoy this video and are going to be investing in these stocks, leave a comment down below. Let me know what you guys think. Be sure to smash the like button on this video. Also, subscribe to the channel. I really appreciate you guys for watching. I'll catch you in the next one. Peace.